bring in Mr. Ramachandran now in this debate. Mr. Ramachandran, let's talk about something that was not mentioned in the President's speech. That was of oil price deregulation. However, it talks about a new policy being evolved that can target subsidies. How optimistic are you about this government going ahead and implementing oil price deregulation?
Well, I'm also disappointed that the issue of deregulation, which has been going the rounds, has not actually found a place in the President's address. There may be many reasons for it. But at least I'm happy that targeted subsidies have been mentioned. You may recall that when the oil prices reached an unprecedented $147 a barrel, many of the oil companies, public sector oil companies, were in danger of actually incurring losses, and they had to be bailed out by a large dose of cross subsidies from upstream oil companies and also by way of oil bonds. Now, the current position where the oil price is hovering around $67 is perhaps conducive of announcing a deregulation policy, putting it in place. Because let us remember that the current softening of oil prices may not continue forever. Once the global economy starts revving up, it is possible that the oil prices once again will move upwards. If you really look at what we paid in 1973, correcting for the inflation, today's $80 is not too much, and it may actually go higher. So it is high time that we put in a credible policy of deregulation. But like Oscar Wilde said, it's easy to give up smoking. He has done it many times himself. So we actually had a deregulation in 2002, which continued till 2004. And just before the elections, I think the prices were frozen, and thereafter the prices went up, and we had government intervention. But now the prices have come down, and maybe this is an opportune moment for us to implement some kind of a deregulation. Coming to targeted subsidies, you are aware today the kerosene prices have not been increased, if I am not mistaken, from 1999. In fact, they were not increased for almost 2 decades before 1999, and the prices from $2.50, I think it be increased in 2 doses to $9 rupees or so. But today, the under-recovery to the oil companies, I believe, is of the order of 13 rupees per kiloliter for kerosene and something like 70-odd rupees per cylinder for LPG. Now, we have been talking about targeted subsidies. If you think that a middle-class family which goes out for a movie, they spend something like 1,000 rupees in an evening, in terms of tickets and snacks, etc., to and fro expenses. But we fight shy of increasing the price of the LPG cylinder by 100 rupees, and the cylinder which will perhaps last the family almost a month. So there is a necessity to look at the targeted subsidies. Right. Targeted subsidies have been already introduced by countries like Brazil, and we need to do that as well.
Right. Mr. Ramachandran, there has been some talk. We've also put out reports on this very basis of the fact that there is a talk that a slab approach might be a good way of going about deregulating. So rather than saying that it's a complete deregulation, you put a slab of various price points of, say, between $50 to $60, $70 to $80. How do you think this would work? And according to you, what is the way in which deregulation should come through? And also, you made a point that right now the environment is such that you are smiling, but if the things continue to rev up globally and the prices of crude keep going up, how much more severe could the damage be to a company like yours?
Well, when you talk about slabs, 50 to 60, 60 to 70, $10, now I believe $1 increase in the crude price, and if you don't compensate by increasing the product prices, yes, $1 increase in the crude price corresponds to something like 2,800 crores of rupees in terms of under-recoveries. Now, coming to bans, we have had bans before. If you remember, in the previous government, we had floor and ceiling prices and moving average prices, etc. It all depends on what you really want to achieve. At some point of time, we have to state what is going to be our priority. I mean, that's why I said the subsidies have to be targeted. Earlier, the government said that the pain, has to be shared equally, if possible, or almost equally. Part of the increase in prices will have to be borne by the consumer, and another part by the oil companies, read upstream companies, and the third part, of course, by government, which has, of course, given oil bonds. Now, in actual practice, really only two things have happened. That is, the government has given oil bonds and the upstream companies have borne their part of the cross subsidies. The prices have not really gone up. The consumer prices have not really gone up. And the reason for that is the enormous increase, unprecedented increase in the oil prices. Now, what is the best way to address this? I think we need to spell out our, who needs to get subsidy, who will pay for it, etc. Now, many countries have systems in place. For example, Malaysia, which has got ad valorem duties, they have automatically the duties go up and down. Depending on the prices go down, the duties go up and the other way around.
Right.
In our case, we have specific rate of duties for products, most of the products. And so what I would perhaps think is a credible way of doing this is to bring in practice
right.
Something like a stabilization fund, which can draw resources. The inflows can be from the upstream companies. The inflows also can be by government putting a cess like education cess. If the consumer is getting a benefit, he may as well pay a part of it. Now, the Chaturvedi committee has recommended that above $75, this is for pre-NELP blocks, above $75, all the increase in the oil price should be surrendered by the upstream company, that is the ONGC and OAL.
Right.
And as far as private companies, 40% they will have to surrender too. So you will get some inflows from that. You will get some cess, if possible, if you can introduce that, and have a stabilization fund. And instead of ad hoc adjusting the prices, ad hoc giving the oil bonds.
Right.
And there is also a need to, improve productivity. See, when the deregulation was announced, we were supposed to get competition, and the oil retailing was to be done by the private companies. We have now companies like Reliance, SR, etc.
All right, Mr. Ramachandran, we'll have to leave it there. We're completely running out of time. Mr. Ramachandran, Mr. Amit Mitra, many thanks for joining in and giving your perspective. Time now for us to take a look at what else is hot tonight.